Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at SPY on the daily and weekly time frame, so we have a bit of a double top at the all-time high. We hit up at 235.14 yesterday and 235.16 today. So we rejected from the same level, but the bulls buy the dip yet again. We see the lower wick showing that, and we maintain the higher low pattern on the daily time frame as well. So it's essentially an inside candlestick, although not so much because we did break the high by a couple pennies, but I'm referring to that as a double top. And the bears, to prove themselves to me tomorrow, are going to have to break 233.85, break the higher low pattern, and see some downside after the downside that we did see today. So on the weekly time frame, we are ending this week still strong, one more day to go, but a lack of an upper wick currently, and showing the bulls are still in full control. So there is no sign of a bearish reversal candlestick. We would pretty much have to see a close around the low 233s tomorrow in order to see a bearish reversal inverted hammer on the weekly time frame. It's possible, but we're going to have to see the bears take charge tomorrow and really own that move. Looking on the 5-minute time frame today, we did see a lot of volume in the morning. And that volume was notable because it was increasing. You usually see a decreasing volume pattern after the open. That's normal as things settle down after the first 15 minutes of trading. But to see that volume spike up, that definitely stands out for the bears as we dumped, broke the lows of pre-market. Then we saw a lower high, and then look at that dump again. 4 candlesticks in a row of increasing bear volume on an all-out dump. The bulls did find support here and really rally towards the end of the day into the close. So yet again, buying the dip. And what I'm watching very closely is the financial sector, XLF, and the technology sector, XLK. Those are both the two largest holdings in the S&P 500. They have both been on absolute fire. And if we see consolidation in those sectors, we will likely see consolidation in the S&P 500. So let's look at those charts real quick. We've got XLF, which made a bull break of a triple top of 23.80 and then saw a breakout this week. So it too has the same inside candlestick, and this is why I'm watching the S&P 500 with XLF. Ever since the election, it's pretty much been hand in hand. The correlation is extremely similar. Let's look back here to the end of January. We had a higher low, lower high pattern, a bull breakout, and now an inside candlestick. And we can compare it to SPY. Higher low, lower high pattern, bull breakout, inside candlestick. So I've noticed the correlation the strongest in the financial sector, but you look at XLK and it's just been straight up 10 days of green in a row. A little bit of a bearish reversal candlestick today, so we're watching to see if consolidation, which will be normal and healthy, occurs here. But the two biggest sectors to be watching when looking at the S&P 500 are the technology and the financials. So we'll check back in tomorrow and see how we end the week. Looking for potential consolidation, but we're going to have to break the S&P 500 higher low daily pattern to see it. I appreciate you watching. Have a great night.